tell us, Jefferson, like, how has 2021 been for you in that macro perspective?
I mean, for a start, right, like we were talking about 2022, I personally feel that it's pretty much like 2021. And in particularly, so you've seen like markets being closed since on Monday, and life pretty much revolves around coronavirus as well. And 2 weeks scarred by the whole COVID-19 didn't really get in the way of great market returns. And there's a good chance that the pandemic will cease to be of much of an issue this year. So that's what I'm hoping for. 2021 has been 2021 has been a year for which for myself is a year of growth, right? And we definitely be talking a little bit more about the growth and value stocks as well later on to explain how it's been. Yeah, on the macro front of things, I think that there's quite a bit that's been going on. If you think about it, there was the whole announcement of the interest rate hikes in 2022, bonds buying back that we covered quite a bit 2 weeks ago. Inflation basically grew massively in 2021 as well. Not the kind of thing that everyone was looking for, because it kind of signaled that easy money is behind us, right? But I think 2021 has really taught us, what it has really taught us about inflation is that an initial inflation shock was driven by this whole transitory impact of the pandemic and only affected a few sectors of economy. But it has then steadily broadened to affect the entire economy, and raising the issue whether the Fed, and other central banks had left it too long to take action. And from all the different
to like raise their interest rates and so on.
Exactly. And with all the different indicators, we basically look at how wages have been rising, not so much mine. And we also see
I don't think any of ours has been rising,
Yeah, exactly.
There's always hope. There's always hope.
Yeah. And it was a year where we looked into commodities and real materials as well, where you have the whole Evergrande situation happening. The Evergrande ship that was stuck in the Suez Canal.
Yeah, the Suez Canal, right?
Yeah.
Oh my God, yes, the Suez Canal.
Yeah, that was 2021,
How many billion
right?
did they lose?
Yeah, was it?
Oh my God, that was 2021.
Yeah, exactly. It was so
Jeez.
really exciting time for all of us. And then you look back, you have the whole China Evergrande moment, which is looking more like long-term capital management. So so ever since China responded to the whole GFC in 2008 and helped the world to recover from the massive monetary and fiscal stimulus, then there has been this concern of a Minsky moment, right, where investors will suddenly lose their confidence in debt. Yeah, and this whole Evergrande situation was one of the highlights that happened in 2021. Who have expected that stricken property developer to left to negotiate with their creditors and appear to be the start of a whole new debt crisis. Yeah. So that's something.
Come to think about it, it's been a weird year, right? There's just so much going on. We've touched about all this, It just seemed to be going from one crisis or one moment to another.
To the next.
It's just like, boom, Evergrande tech, China tech. I think there was a dip in growth stocks in May as well. Then for a while, everybody was playing, the reopening trade, and cruise liners went bonkers. Then shortage of natural gas. It's just been insane, man. I'm tired.
Yeah, it has actually, right? It's been such a volatile year, right, for all of us. But I think I want to just dive down a little bit more into this interest rate hikes, that you guys were talking about, right? And I think one of the points that Jefferson mentioned earlier was the fact that there was a lot of stimulus, right, from 2020 into the market. Effectively, the Fed just reducing interest rate, giving money, right? In Singapore, we got lots of money from the government as well to spend and rediscover vouchers and all right. Like all my rebates and my GST rebates and all of this money to go and spend effectively, right? And what they tried to do here was to funnel the economy, to make sure you try and spend so that it won't be affected, right? In the form of, and in this case, COVID was affecting all the spending and all of that expenditure. Where Jefferson came in, though, was that it was affecting certain sectors, right? We had tourism, we had all these other things. But later on, it became the entire industry where we felt, at least for myself, right, as an investor in 2021, was that there was a lot of liquidity in the market. Especially in Q2, Q3, where a small expected increase, like for example, on an earnings call, if it was above expected, it shot like crazy in these growth stocks, right? What do you guys think about this? Do you think they left it too late? Do you think it should be a little earlier?
Jefferson, why don't you go ahead first?
Oh, okay. For myself, I
Go
guess,
ahead.
I guess, on the back of the whole rate hike situation is really, inflation, right? It's just one word, inflation. And it itself, if it rises from here, then the Fed definitely have no choice but to, tighten. And expectations of a Powell put to rescue the stock market from a fall would definitely be disappointing. And I think, as mentioned the previous time, it's kind of a treading on thin ice, right, for the Fed, where if they were to bring the rates up too quickly, then it would definitely hurt equity returns as well. And this whole situation is not something where Powell is very apt at handling, because he has always been a Fed chair that comes in with fiscal stimulus, monetary stimulus to help to aid the whole economy, to just basically loosen up the whole post 2008 environment, and just to aid with liquidity issues due to coronavirus itself.
Got it.
Yeah, so I wouldn't say that the question to which whether the Fed had stepped in late or early, I guess it's still up for debate, right? Very much up for debate. And it's only through past data, which in this case was inflation, then we started seeing that, hey, it was a nasty surprise coming forward and something has to be done. So the Fed, comes in, take action and say, hey, we are going to, do some form of, we're going to basically do some tightening in that sense. Yes, exactly. Yeah. So
yeah.
It's definitely a year where inflation has proved worse than all, but the most pessimistic forecast in that sense. And well, risk assets still had its own banner year, right? So, but I would foresee that it's unlikely to happen in 2022. Yeah, but who knows? Yeah.
Got it. And Anthony, what are your thoughts, man? So effectively, Jeff said that he needed historical data to prove that inflation was too many. So really, the Fed left it late. No, let's be honest, right?
No.
Yeah.
See,
but what are your thoughts? Yeah.
Okay, I don't think he said that, but yeah, I have a lot of sympathy for them, right? I mean, look, we are still in the middle of a pandemic. Lots of liquidity sloshing around that kind of pushed everything up. House prices went crazy. Supply chain issues, everything went mad, and that led to inflation. Right, but the reality is this, right? If he raised rates too early, he would just cut off the economic recovery in that sense, right? And that's part of his role as well. His role is not just to control inflation; it is also to manage in a sense that the economic cycle. And if that's the case, yeah, I mean, I think in reality, it's right to place more emphasis on making sure that jobs come back, making sure that there's real economic growth more than my growth stocks have tanked. Oops, So yeah, I think a bit of sympathy for the tightrope that he was made to walk. But yeah, that's by the by, right? I really hope he turns on the money printer again one day.
Yes, hopefully, because my portfolio is red again, man.
I don't want tightening to lead to a recession, right? Because that's just a lot more.
No.
Yeah. So if he's
it's a tighter cord now.
Yeah.
Yeah, no, definitely, right. Like I said, it's a tighter cord now, and he's got to balance that out. And definitely sympathy for him. And I don't want to be in his position. In all fairness, it's very hard to keep everything at balance, right? But and I think the last point that I have here is that with regards to this hike, interest rate hikes, and whether to tighten or whether to not tighten throughout 2021, was effectively COVID just literally said, "Hey, I'm circling back." right? We've got the Alpha, the Beta, the Gamma, the Omicron now. And they literally said, hey, I ain't going anywhere. I'm coming back. So in 2022, for example, if there is another variant, what do we think here? Do we think that, you know what, based on his history or historical data, inflation is high, so therefore I'm tightening it? Yeah. What are your thoughts here, Anthony? I'll start with you.
I don't think anything will change. I think we are all learning to live with the virus in a sense. And if, I mean, once a tragedy, 10,000 statistic, right? And there's so many people have died. I think that there's a sense of numbness to it. We just live our life, manage as well as we can. If you are American and you don't want to wear a mask, so be it. That's on you, and that's it. We live our life as best as we can, and so I don't think further variants actually will have too much of an impact on the real economy in that sense, right? We have managed the worst of the situation. We have gone past it. Of course, that being said, I'm not a virologist. I have no idea what could happen. It could be real. It could be deadly, more deadly and more transmissible, right? But I mean, I think in reality, we'll just find a way past it and minimize the damage, right? The playbook is written. It's just a matter of repeating it again and again.
Cool.
Got it.
Well, I think,
awesome, guys. All right. I think,
I think that on the flip side, right, one of the things that we can think about is that if the virus is gone or the whole pandemic subside, then what? One of the things that top of my head I could think of will be the issue of shelter, right? Which then you start seeing all the house prices have been always going up. Then you're gonna see rents also start to follow upwards as well. It's never going down, in that sense. And that also means that there's going to be increase in demand and higher prices from all the economic reopening, and all of which will still run to the base case of which, or realistic base case of which, for 2022 to be dominated by the continued knife edge judgments by the Fed. I would believe so. Yeah.
Got it. What is the knife edge judgment?
No, I mean it's just
the balance, right? That
it's just a balance.
Can't tighten too
Got
quickly and he can't tighten too slowly as well.
Yeah.
Got it. Yeah. Got it. Like a double-edged sword, a bit.
You just want inflation to not accelerate.
I think.
But you
yes. You want inflation to control, so you want
right?
inflation,
Yeah.
but you don't want too high inflation.
Yeah.
I think that's
exactly.
Get what you mean. Cool.